Hey everyone, how's it going? My name is Richard Moglen and welcome back to your stock market outlook video sponsored by MarketSmith. And right now we are obviously in a correction. We've been really in a downtrend since this point right here where we lost the 21 exponential moving average as well as the 50 SMA right here. And now we're just in a decline here. And there will be obviously some oversold bounces rallying back into the moving averages, but likely we will continue to chop around, potentially restarting the decline and even taking out these lows. So be ready for anything. This is really a time to take a step back if you're a trader, be in cash and wait for conditions and setups to improve and the overall market conditions to improve as well. Looking over at a weekly chart, this gives you the longer term perspective. We've broken this 40-week moving average, which is pretty critical. And as I mentioned last week, it was really critical that we try to hold last week's lows, and that kind of final line in the sand was breached this past week. And right now we're just in a downtrend. No one knows how long this will last or how deep the market will go. You do have some potential levels here, like the anchor review up from these lows, as well as these tops of bases, as well as these levels down here. But you just really have to be ready for anything and wait for conditions to improve. Going back to a daily chart, there will be oversold bounces within this downtrend, which if you're a very short-term trader, you can try to take advantage of. But if you're more focused on the long side of things, feel free to just take a step back, pursue other hobbies, study, read books. There's so many different things you can do during corrections to prepare yourself for the next uptrend. I actually made a completely free article right about that topic. So go ahead and click the link down below in the description and popping up right now if you're interested in that. Going over to the S&P 500, this looks very similar, although it's holding up a little bit better than the NASDAQ, but still we're below a declining 21 and 50 SMA here, as well as breaching the 200-day moving average on this last Friday, and the 45,000 level has now been lost for sure. And we'll have to see whether we continue this downtrend, have some oversold bounces, and potentially find support at some previous areas of support back in here. But be open-minded, be flexible. That's a main theme of that article that I wrote. Be ready for everything. Do your homework every night and every weekend so you're ready when the next uptrend resumes. Moving on over to the other ETFs, let's start with the Iwm Russell 2000. This is losing this entire basing structure, which once again, last week I said I really want to see hold, but we did not. And right now we're just in a downtrend below a declining 50 and 21 EMA here. Looking at small cap growth, this is even worse here. Once again, in a very significant decline here, and once again below a declining 21 and 50 SMA. Looking at the FFTY, this is also in a downtrend below a declining 21 and 50 SMA. And you can see how the downtrend really started, maybe even here at the failed breakout. This day right here, distribution, this really confirmed it, breaking the 50 SMA and 21 EMA. Then this was just kind of an oversold rally back into the area of those SMAs, and then the selling really took hold right here once again. So if you're on the short side, there were probably some very good opportunities as we broke these kind of lower lows here last week, but now once again we're very extended and likely to have some very sharp pops to the upside. I thought we were actually going to have one on this day and this day right here, but the selling was so strong that it really just sold any rally into strength. And if you are playing the short side, please keep in mind that we're kind of extended to the downside here, so the risk reward might not be great, and we could have some very quick short covering rallies back upwards. So you just have to be ready for that. And really the ideal points to short are in this downside reversal or as we broke these lower lows right here. So with those indexes covered, let's take a look at a few key growth names. First of all, obviously Tesla. This really weekend lost 1,000 on this Friday, and on this day we tried to rally back into the moving averages, got denied, and finished right at the lows of the day, and we had that fall through on that Friday, losing that key level. Also looking at Nvidia, kind of looking at the semis, this is in a downtrend as well, below a declining 21 and 50 SMA. Looking at some names that really have been holding up well, we've got F, which was one of the kind of last EV stocks holding up really well, and we lost that on this Wednesday right here, and fall through to the downside, broke the 50 SMA on this Friday. Also taking a look at MU, you can see that this also fell apart here. So even the names that were holding up well early on in this correction that likely would have been the leaders if this was a very quick correction, they've now been taken out, and it's kind of reset the slate. And now we just have to wait and watch for group themes to emerge, as well as new leaders to emerge that show relative strength as we start to near the bottom of this correction. So those are a few names to look through. Also taking a look at AAPL. This has been a mega cap leader, also in a downtrend. Netflix had that huge gap down on earnings. Definitely bad news for the general health of the market. And I'll be really interested to see how the earnings next week, where a lot of stocks are reporting, like Microsoft. I want to see how those earnings reactions are met by the market and see if we get some more gap downs or gap ups, because that really kind of tells you what the risk appetite of institutions is in the market. And I'm moving on over to TC2000 and taking a look at a few more charts. You can see that even the names that have been showing relative strength got taken out pretty much last week. SIMO now in a downtrend below declining moving averages, holding up above that 50 SMA. However, Qualcomm also breaking below these key moving averages. EDR also below the 50-day. XLE, the entire group, hurting a little bit here. XLF as well. LRCX below all key moving averages. Tech just below that 10-day moving average. This is still holding it pretty well, but is below that moving average it had been respecting back here and back here as well. Lucid just kind of keeling over a little bit, still holding up above this higher low right here. MU also breaking down, as we saw. AMR breaking down. F we talked about already. FCX also breaking KMAs. So all of these look like they're kind of starting potential downtrends or continuing previous ones. Also looking at some previous leaders. I'm not going to go through all these charts because most of them are just in significant downtrends, but pretty much all of them look like Team, where they started their downtrend back in this area right here, rallied back up into moving averages, and then reconfirmed right here, and then also late last week. So we have to see whether this chop here evolves into a bottom, or we see one more kind of leg down in these names, and then finally start kind of the potential start of a bottom of a base. But a lot of these need a lot of time, and the bigger the damage, the more distribution to the downside, the longer it's going to take to form out a proper base. So keep an open mind, keep an eye out for new leaders to emerge, names you haven't even heard of, and maybe earnings will provide those new names with new opportunities that could become the leadership going forward. And moving on now to my Twitter surveys, you can see that sentiment is still pretty low here. But we aren't in a correction. This is a completely secondary indicator. And I'd be really interested to see if we ever drop down to, I don't know, 15, 10% even. That really would be a significant drop. Moving on to the psychological market indicators, the put-call ratio is rising, but still not spiking to these levels right here. And the bulls versus bears poll is right at the 40 level. I'd love to see these really start to cross. That could indicate the start of a potential market bottom. And lastly, looking at the name exposure index, this is declining, but I'd love to see us undercut these lows right here and even get back down to the 40s and 30s like we were back in the 2020 correction. And moving on now to the IBD big picture article. The headline is "Stock Market Tumbles Again as Investors Grow More Fearful. Is a Bottom Near?" And reading through the article, they discuss kind of what happened on Friday and how there's kind of mass distribution. They also discuss the VIX, how it spiked. And also they discuss a few names. CF actually performed well, up 2.6%, which is significant and definitely one to have on your radar here. And they discuss kind of what to do now, waiting for that fall through day. And they discuss a few more names, SIMO, STX, to watch in the coming weeks and months. So overall, their current outlook is a market in correction with one leader up in volume, CF, and a few leaders down in volume. Lastly, we've got the Wishing Well GMI signal, which is still red since January 10th. And the GMI was a 0 out of 6 on this past Thursday. Overall, my current view is still a market correction, but as I said, be careful because we could have very quick oversold bounces if you're on the short side. And if you're just playing the long side, just kind of sit on your hands, wait for conditions to improve depending on your time frame, and stay optimistic because there will be another uptrend. There will be many, many, many future true market leaders emerging, and we just have to wait and be patient and wait for all the setups to emerge. So I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below, subscribe if you're new to the channel, and I'll see you guys in future videos. Thanks.